Hi, I'm Steve Doherty. I'm the Raleigh VA loan guy. Thank you for tuning in. So today I want to talk real quick about some of the less considered advantages of refinancing a mortgage. So the big advantage in refinancing a mortgage, unless you're doing a cash out refinance, is that you are reducing the interest rate, which would reduce your monthly payment, but most importantly is going to reduce your interest expenditure. You will spend less money on interest, essentially less money on fees on that outstanding debt that you have when we lower the interest rate. But there are some other nice things, some nice perks about a refinance that you may not be considering. So the first benefit of refinancing, aside from reducing that interest expenditure, is that you may skip 1 to 2 mortgage payments. So just like on a purchase transaction, your first payment will be 2 calendar months after closing. Not 60 days, but 2 calendar months. So if you close on, let's say, December 10th, your first mortgage payment will not be until February 1st. In the same vein, you will not make your December first payment to your current mortgage provider. So that means you skip December and January for a payment. Now, if you close in the first 5 days of the month, we may do an interest credit to reduce cash to close, to keep the loan balance low, in which case you'd only skip 1 month. But you're still skipping at least 1 month. So you have a nice little short-term cash flow injection just by refinancing. The second big benefit of refinancing is if you're escrowing taxes and insurance on your current mortgage, you will get that balance back within about 25 days of closing. We will recollect those taxes and insurance on your new refinance, but that means you get the old amount back. You don't have to add it to the loan amount, but that's generally speaking what we do. So then you get that extra back. So when you think about skipping 1 to 2 mortgage payments, plus getting your escrow balance back, it could feel, from a cash flow perspective, like skipping anywhere from 2 to 3 mortgage payments. So those are 2 other things to think about when you're getting ready to refinance. They're kind of like a little bit of icing on the cake. It's not necessarily the reason to do a refinance. In fact, if those were the only 2 benefits, from a compliance perspective, a mortgage lender may not be able to refinance you. So it couldn't be a tool to buy yourself a couple months of time to make a refinance. We would still have to reduce the interest rate by some margin, but it's kind of a nice thing to think about when you're maybe sort of on the edge debating whether or not you want to refinance. You will get a nice little short-term cash injection. My name is Steve Doherty. I'm the Raleigh VA loan guy. Thanks for tuning in.